Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Happy CPI day to you. I hope you are all doing well. Let me just pull up my Forex factory just so we can see what we've got in front of us. So we have CPI. Tomorrow we have producer price index, I believe. Today we have the core CPI and CPI year over year. Pretty important statistics in terms of what this market is looking for. People are anticipating the Federal Reserve to cut interest rates this year, or continue, I should say, cutting interest rates this year. And so what is the biggest barrier to potentially stopping that? Well, it would probably be CPI rising. So today we are expecting 2.7% inflation. That is in line with the previous number. So real quick, let me just show you this here on our side here. I've got this handy dandy new asset scorecard here to discuss this with you. So if we take a look at CPI, right? CPI overall has been coming in softer than expected. The previous number was 2.7%. That was a lower print than forecasted at 3.1%. And the surprise was positive, meaning to the downside. Lower inflation, good for things like silver, gold, stocks, etc. Not so hot for the dollar. So today, the question is, are we going to get we are going to get a new read? Is it going to be a soft print or a cooler than expected print? As expected, meaning it comes in at 2.7 like people are forecasting? Or is it going to be a hot CPI print? Are we going to have a higher than anticipated CPI print? That is the question. So let's talk about, as we do with all of these major news release streams, how this could potentially impact the charts that you care about. Real quick as we get started, if you could let me know, comment it in the live stream chat. Just let me know, what are you most watching here today? Are you looking at gold? Are you looking at silver? Are you looking at US dollar currency pairs? Are you looking at the NASDAQ? Just give me a little bit of a who's watching, what type of traders do we have in the room? We do have a pretty diverse list of different charts that we discuss, so I'll do my best to cover as many of them as I can. Of course, we will be covering the big ones, NASDAQ, gold, and dollar. But of course, we will also try and see if we can look past those main areas. Let's talk about the dollar here first and foremost. And I think that the dollar index is actually pretty straightforward here. In terms of CPI, a hot CPI print, meaning high levels of inflation, would cause the dollar index to likely go up. So we're forecasting, let's just explain this. Forecasts are set by economists who make predictions as to what they think inflation is likely to come in at. So we're forecasting for 2.7% year over year inflation. Now, this is definitely a lot less than where we were a few years back, where we were getting reads of inflation in the 8%, 7%, 9% in the US. We have come a long way. In fact, I think it's also important that we know our context here. If we go under economic data, inflation data, CPI year over year, check this out. If we zoom this read back a couple of years, what you'll see here is inflation has made a lot of progress. It has come down a long way since where it was post-pandemic era. So we have had inflation improving overall. And so we have, with that, seen the dollar index kind of cool off. And for the most part, I mean, in large part also due to tariff uncertainties and things like that, we've seen the dollar get sold heavily. We're seeing something kind of similar with the Japanese yen right now, where people are moving away from Japanese yen. But the dollar now becomes we have to ask the next part of this story. We've gone from cooling inflation to now a jobs market that's weakening, which has been also a persistent bearish force on the dollar index. Jobs data we know is weakening in the United States. We have seen that and discussed that over and over on these live streams and videos. So when we take a look at the dollar index now, with the context of today's CPI print, we're going to obviously be getting here December's inflation report, obviously reported here in January. So when we're talking about inflation today, forecasts are for 2.7% year over year inflation, or CPI. Okay. If they come in higher than expected, if the number is 2.8, if it's 2.9, what does that do to the dollar? And if you are, just thinking logically through this with me, do this as a thought experiment, try and answer these questions for yourself. What does this type of read do to the dollar? If you get high inflation reads, does that cause the dollar to potentially continue higher? Or is that more of a bearish pressure? Well, the answer is this is more of a bullish scenario, right? So if you are talking specifically about the US dollar, high inflation means the dollar would likely move higher. Why? That sounds kind of counterintuitive to somebody who's new to this stuff. Well, here's why. High inflation means the Federal Reserve will have to hold off from cutting interest rates. And when you hear cutting interest rates, you can almost swap in money printing. So when the Fed slows they're like, okay, we're not going to print money, right? We're not going to flood the money system as much. That is where you say, oh, okay, so that's bullish for the existing currency supply. Dollar index should move higher, right? Okay, well, what about if we get a 2.6% reading? What if inflation's really cool? A lower than expected 2.6, 2.5% year over year inflation? Well, that is going to be bearish for the dollar, okay? Right? So this would be a good thing for most people would appreciate. Most markets would love a cooler than expected inflation print. Why? Well, the Fed could then be more likely to cut interest rates. Cutting interest rates, essentially money printing. That's great for stocks because companies will love the idea of lower borrowing rates. So will consumers, credit card companies, et cetera. Interest rates lowering are a relief to the average consumer and to businesses and potentially also homeowners, right? People buying homes, mortgage rates could potentially move down, although there's some side notes and caveats with that. But generally speaking, lower interest rates, it's like printing money into the system. People love that. Higher interest rates, taking money out of the system, people don't like that, right? So that's now the dollar index obviously does like interest rates staying high. Why is that? Well, because then people get higher yield on US dollars when they buy treasuries, et cetera. That's the phenomenon. So anyways, all that said, lower CPI today than expected. You have to understand something because people get confused by this. If inflation comes in at 2.7% today, what does that do to the markets? Probably causes a whole lot of noise. My opinion, if you get a 2.7% year over year inflation, you'll get chatter on most of the charts. If you get 2.6, 2.5, et cetera, you'll probably get dollar weakness and gold strength, stocks strength. And if you get 2.8, 2.9, then you probably get dollar strength and weakness for commodities, precious metals, stocks, et cetera, right? So we don't know. Now, and I also want to just clarify something. I've been doing these streams since 2018, watching news, economic data like this, and discussing how it impacts charts. Every single month that we do a CPI report, NFP report, you get people commenting, oh, it's going to do this, it's going to do that. Nobody knows with certainty what CPI is going to come out as, right? Unless you have some sort of insider information, in which case, that's probably borderline illegal. I don't know all the legal terms on that, but none of us know. That's the short answer. And so please be careful. A lot of people will make huge bets on a CPI report as if they know what the candlestick is going to do next. And trust me when I say you are much more likely to lose money trying to scalp the news than you are to make it because of a simple concept. Brokers widen spreads dramatically right before these events to protect themselves from potential tail end risk. If you had some giant blowout, a lot of brokerages do not want to be on the hook on that. So they widen spreads before news events to account for the increased volatility. It is, straight up just risk management 101 on their side. So you are very likely to lose money if you're trying to scalp the 1 minute time frame and say, well, it's going to go up. I'm going to just buy it because it's going to go up a ton, or it's going to go down, right? Please be careful with that thinking. Trust me, it's not that easy. If any easy money like that existed in the world, people would have already taken advantage of it. Anyways, precious metals. Let's take a look at some charts here before we've got just a few minutes to go. Gold breaking to new highs and actually holding those gains from yesterday. We did end up trailing stop loss in the signals room. I am still long gold, stops trailed, looking for higher prices on gold here, and just going to continue to follow the trend here. Silver is a monster, like just a pure dragon. Silver is running hot. And you know what's crazy? Nobody cared about silver a year and a half ago. Everybody just was like, no, just trade gold. Gold's way better than silver. Silver has monstrously outperformed gold. Monstrously. The thing is a money printing machine if you've been long on it. Obviously, that could change going forward, but don't just stay, true to your own convictions, to your own, ideas and markets. That's all I can say. Year and a half ago, nobody liked silver. Now that it's up so much, everybody wants to buy it. It's interesting how that mentality works. Anyways, I think momentum can continue here. Silver, I've been bullish on for a very long time, and I'm thrilled to see it actually making a move that we've been looking for. If you get pullbacks into the 82.50 level at this point, that still looks constructive, although I still like the 38.2 and the 20-day moving average a little bit better for pullbacks on this one. We'll see if CPI gives us that today. We have only about 2.5 minutes here to go before we get the CPI print. So we'll see how that all brings what happens today. NASDAQ's at a pretty critical spot. Don't go anywhere after the spike. Things get really interesting afterwards, because once we get that CPI report, then we can start discussing what impacts this has going forward, not necessarily for the next 10 minutes, but for the next few days, for the next few weeks. What has this in store for us in terms of precious metals, currencies, indices? We'll talk about all of it, and we'll do our post CPI analysis here once that number breaks in about 1.5 minutes. If you're enjoying the stream, do me a quick favor. If you could thumbs up the stream, smash that thumbs up button, help us out. We're hurting on the like department right now, and I would greatly appreciate if you could help me out on that. And subscribe if you're new. We do these for all major news events. So if you found this helpful, subscribe, turn that post notification bell. If you're taking your trading seriously, come join us, come trade these events with us, and actually understand what these events are. Everyone knows them as red folder news. Come on, man, we can be smarter than that. We can understand what a CPI report is and how it impacts the charts that we care about, right? If you understand macro, you can start aligning yourself with the bigger picture. And most traders are just staring at like a 15-minute candlestick pattern and wondering why they're not making money. Understand what this stuff means and where it's driving markets, and you're more likely to actually find real trends, not necessarily just chasing a 15-minute candlestick that can fake you out in the next one, right? Let's look at the 4 hour, let's look at the 1 hour, let's look at the daily, and let's build trend based on macroeconomic data. It's, made a lot easier when you have the right tools to look at it, to build a bias, and to actually follow not just the technical trend, but the macro trend too. If you're ignoring the macro trend, let's change that in 2026. Join this channel, follow it, learn for free. It's all right here. Okay, we've got about 20 seconds to go here. What I'm going to do is I'm just going to switch over really quick to our all markets view, just so we can have an idea of what all the different charts are going to do in response to this. We've got S&P, NASDAQ, gold, silver, dollar index, oil, Bitcoin, Dow Jones. We've got about 10 seconds to go here before the CPI drops. Let's see what it brings, and then we will respond and build a bias. Okay, CPI should be dropping momentarily. Initial response is dollar index slightly lower here. Not a huge move, though. I'm going to assume if CPI is out right now that we have a 2.7% read. That's my guess. Let's see. Still says pending. Yep, 2.7. Okay, so we called that 2.7% inflation on the dot. So that is going to be, why is that not moving the markets? Well, I just showed you, right? So the reason I knew that CPI came in at 2.7 before even looking at the number is because the charts didn't move, right? The data impacts the charts, right? So when we know that CPI came in at 2.7%, 2.7% was as expected. That's what the market's already kind of forecasted. So you're not seeing a monstrous move in response to that. You can see dollar index is just tiny bit down here. Bitcoin, pretty flat. Dow Jones, mostly flat. S&P 500 slightly higher. NASDAQ slightly higher. Gold slightly higher. Silver, just doing its own thing. Silver's just going up just because it likes to at this point. We'll see. But yeah, what that would tell you for CPI is that 2.7% came in line with expectations, neither a improvement to the scenario nor a detriment to it. At the same time, though, we did have core CPI. This is a positive. So you did have core CPI come in on a month-over-month level, slightly better than expected, lower than anticipated. So if anything, you could just maybe read this CPI report as just slightly positive for the inflation story, meaning just a tiny bit bearish dollar and precious metals and stocks and cryptos slightly bullish. And you can see there goes S&P 500. Yeah, so not a huge move. You have a 0.25% higher on the NASDAQ, but we'll see if when we take a look at the indices really quick, take a look at S&P 500, you are at all-time highs. The trend here continues to favor upside. So today's CPI report not blasting us with a higher than expected read, I think kind of just gives permission, my personal opinion, for the trend to just keep going. So I wouldn't try and fade this. I wouldn't try and short this thing. CPI coming in, giving us the check mark. It's not a big threat to what is already an upward trend. NASDAQ's trying to break out here. And I think this is also fine for metals as well. Take a look. Gold is in positive territory here, up to 4,600 an ounce. Silver up another 2.56% here today. We are just charging, man. We're just charging the mount on this one. And just wants to keep going, it looks like. So I am not one to fight it, right? Yeah, silver's just going up because it likes to at this point. Seriously, it is going crazy. What is the difference between core and headline? So core CPI takes out like food and energy. It takes those out of the readings, right? And it just sorts out like kind of goods and services, et cetera. And so it's less some of the more volatile aspects like food and energy, which change a lot month to month just in price due to, supply, demand, et cetera. Core CPI coming in slightly better than expected. So some of the more sticky aspects, slower moving aspects coming in better than expected, which is good. So, gold, silver, precious metals remain the number one spot for me in terms of a bullish conviction. We take a look at silver here on the asset scorecard page. By the way, thank you all for the feedback on this one. We got a ton of good feedback on this new page. We also had a lot of input from people adding ideas on things to add to the chart. So thank you very much for that feedback. I don't know. I feel like it looks really good. We're almost done with it. Most of our economic data is in. We even added, if you scroll down, if you have Edge Finder, scroll down on this page. We added some technical shortcut data points. So moving averages, the target ideas from Edge Finder for silver, target. By the way, we already hit target 1, target 2, and target 3, $93 an ounce. I mean, it sounds crazy, but the way silver is moving, man, it just keeps going. This is insane, by the way. The average 7-day movement, the average move in the last 7 days is like 5% per day on silver. Monstrous. Insane. Anyways, when we take a look here at some of the statistics behind why bullish silver is still such a strong reading, Edgefinder score overall plus a technical read, clearly uptrend and seasonality looks good. Sentiment, we see essentially institutions very long on silver and even adding more long positions to silver. This is the most clean setup that I see on Edgefinder right now, is continuing to stay bullish precious metals. Fundamentals are getting strong score, mostly because inflation data is not threatening. Economic growth, this once factored in, consumer confidence is missing from this score, but you'll see that there are 3 bullish readings here in the economic growth and 2 bearish. So this will actually flip bullish shortly. So economic growth bias is also bullish with consumer confidence, retail sales, and ISM manufacturing PMIs coming in soft. So when we look at the data, right, when we look at the economic data, no wonder silver continues to push higher. We've been saying this for weeks now. Precious metals are just the path of least resistance right now. Now, I have to reiterate, I know I sound very bullish. I don't know for certainty that this is going to keep going. I'm just telling you that for now, the path of least resistance, if nothing else changes, we get a pullback and I'm a buyer, right? I buy that dip, I wait for the setup, and I keep playing it until it breaks, right? Until this reading cools off. But take a look at this. We added this new edge finder score over time in the bottom left here. So what this is showing you is obviously the edge finder score the last few weeks. And what you'll see for silver is it's just been predominantly just staying bullish, bullish, bullish. And I've obviously agreed with that call, and it has been the right thing to do, is to stay with the trend. Sometimes the easiest trade is just to ride with the momentum and not to fight it. So at some point it will change. At some point you will get a larger scale correction in precious metals. I just don't know when that's going to be, and I would love it, right? From a longer term look, I'm precious metals. I'm a long-term bull on precious metals. I will say I am trading it right now to the long side. I'm not investing in it right now, right? I think that you have to be careful making some sort of huge life-changing investment in precious metals at these levels, because they're just insane. They could keep going, right? But they could also crash violently. So as a trader, I'm just trailing stops. As an investor, I would welcome a larger scale pullback in precious metals. Anyways, guys, we're going to bring into the conversation in just a moment. We'll bring in Chris Pulver here to hear what he has to say post CPI. For people just tuning in, like I said, CPI came in 2.7% as expected. This is in line with expectations. That's why you're not getting really violent responses in terms of the charts here this morning. But so far we have 2.7% CPI in line with expectations here this morning. We also had core CPI came in a little bit better than expected. So seems like you just had just a tad higher for stocks. Dollar index here, pretty unchanged. Initially moved lower and bounced here. What's up, Chris? How you doing, man?
Good morning. What's happening?
Not a lot. So CPI, little, I'm pretty much in line with expectations. Maybe just a slight better due to that core reading. What are your thoughts here? What are you watching this morning?
Yeah, I pulled up the Bloomberg calendar. So the monthly CPI came in softer. The yearly core CPI, I think that was a big thing. Since we had the government shutdown, everyone was kind of questioning the they zeroed out October and then the data print we saw last month. So now that it came in with core CPI 2.6. Again, I mean, not a huge reaction, but what I'm seeing today flow wise is we're likely going to drift up and officially take out that 7,000 handle. So I think the market's about to hit a pretty solid milestone. 7,000 is a nice big round number. I do have a little bit of kind of week to week caution in the near term, but this path of least resistance continues to show just, don't fight the flow, don't fight the upside. I don't know if we're going to face a blow off top. And this is what I've been waiting for some of my trades is, are we going to face a, blow off top type move where it just rips through 7,000 with a lot of added momentum? And let's say, in the next 4 weeks, this thing's up to like 72 or 7,300. I could see that happening, but I'll ask you, would you be more cautious with that type of, let's say month, if we're up to like 73, 7,400, or just like a little slow grind chop fest between like 7,000, 6,600?
For sure, if we, I feel like we've had this very low vol market for a little while, and those make me nervous in the sense that when you stay low vol for a while, right around the corner feels like, that's where you get the big pop. So I don't know where that happens. I do think you probably have some volatility coming in 2026.
Yep.
And so I feel like in terms of how I'm playing it, I'm actually pretty neutral on S&P right now, I think, and NASDAQ. So as you kind of get higher in these levels, I'm definitely not a buyer. I'm not chasing this thing. As opposed to precious metals, where I feel like there's a very clear bull case that makes a lot of sense to me right now.
Yeah.
I feel less inclined on indices. So when it comes to, what we've got here, you've got this chattery breakout going on right now. Look, I could be wrong, but I think that there's kind of a limited upside for S&P and NASDAQ unless some big catalyst comes along. I feel like you've got very low or very high valuations. You've got most of the story looking really good, and you've also got crowd sentiment pretty bullish out there. So to me, I think the better play is to wait for pullbacks on S&P, NASDAQ, et cetera. I do have this Russell trade running, and this thing is been pretty solid so far. So my opinion, Chris, is I think some of the rotation stuff actually makes more sense, and staying with that side of the trade rather than just kind of jumping back into the broad index or Mag 7 personally.
Yeah, I do think Russell could be one of the biggest beneficiaries this year. I mean, they're due for some pretty lofty valuations, but we're continuing to make all-time highs. Year to date, I think Russell is leading the charge for the U.S. markets, up 5.6%.
Yep.
You know, I did here. Let's just look at the measured move here for the Russell. I think that you know, take this larger swing from COVID. This is a weekly chart here, so take the larger swing from COVID. My symmetry area gets me up to around 300 on the IWM. So if anybody likes the ETF, this isn't a bad one. I have a lot of trades in for pulver alerts with ratio spreads, naked puts. I can probably start upping these a little bit. But like you said, I think the rotation is really going to be the story for 2026. I could see, you know, Mag 7. Here's an interesting comparison. Let's do Mags versus IWM.
Yep.
And you can see that IWM is gaining the strength. So since we really peaked out here in October, that'd be kind of your top in Bitcoin, your really big rip in silver. The rotation, I think, started to get underway. This is something I think we should continue to watch. This, I mean, you can get some data feedback here going back to 2023. But what would be really interesting is if this continues to show, you know, the chart looks like it's going down, but that would be the Russell is outperforming the Mag 7. So
Sure.
to me, that's a pretty important story for this year. I don't know if it's going to require the Fed to continue to look at like a 25 to 50 basis point cut. If they you know do cut, then I think the market's going to continue to shine on small caps. That would be the only kind of hiccup for volatility in Russell. But even if we have a dip or a pullback, I'm curious to see how price plays out. I mean, going back to October 2023. And then of course Liberation Day, it's like it's just really strong support here on IWM around the 170, 165 handle. Let me see right now. I have to log back in. Nope, I'm good. Let me see Russell. If I can get, I've got some expirations in the next couple of months for IWM. I'm going to see if I can get like a 165 or 170 by 160. Let me check the timeline here. Let's go out to the. I'll make a bold call here, Nick. I'm going to go end of the year. Either December 18th, December 31st. I mean, we got midterm stuff. That's not great, but I think probably the profit is high enough. All right, so I can go 190, 180, or I'll go 185, 175. Okay, so probability profit 98%. We're way out of the money. This is a 6 delta. If I did a 185, 175, what I'm expressing here is I'm willing to own the Russell. That would be a break even of 165, almost 163. And if you, I mean, I guess I'll ask you, if you own the Russell at 163, would you be okay with that?
Oh yeah, I mean, to me that's a bargain. I mean, and the thing is, Russell has been so, you know, compared to Mag 7, right? All the tech stuff. This thing, it really hasn't moved that much. If you take a look at the monthly time frame, I mean, you're talking about here's 2021 levels. We're finally starting to break out, and I think one of the cleaner charts out there. Sorry, my cat just walked past the screen. One of the easier charts out there that I've seen in trading land without overthinking it is like the Russell on a monthly time frame. I mean, that was just such a clear breakout. I know you've even talked about that line right there, Chris. It's like you don't usually on that type of a timeline have triple tops, right? A monthly time frame with that much conviction, Fed cutting interest rates. Look, I think whether you like or dislike the current Trump administration, I think it's probably fair to say that the market is sniffing out that there's going to be a lot of money, pumped into the system. I mean, regardless of who's in the White House usually, but especially with the Trump administration, right? They seem very keen on, growing out of the debt, and whether that works or doesn't work, I think it does favor domestic companies like the Russell. These are less international compared to like a Mag 7. We've said that story. Maybe I was early with that idea in previous years, but I still think that there's a little bit of a Trump trade here for the Russell as well, personally.
I get it. I'm gonna take that trade. I'm gonna go 185 by 175 with the ratio spread. I'll post all the details for pulver alerts. But this is going to be. I'm trying to get filled at $1.80. Market's obviously not open yet, but I'm gonna try to get $1.80. And if I get more or less, then I'll post it what the official fill is. I'm just gonna get this posted. This is gonna be a margin account trade because I'm willing to take the assignment, and I just don't want the cash position to be tied up. So. This is taking about $1,800 in buying power for me out of my margin accounts. versus doing, if it was an IRA, then it would be taking roughly like 16K. So what I'm going to do on the IRA stuff is I'm probably just going to put in like a wider spread. So I'll do the 185, 175, and then maybe like a 125 or something like that. So I've got a bit more risk, but I can tighten it up to like $4,000 or $5,000 of buying power. So I'll see if that gets filled this morning. Let's see, 16 weeks. All right, so let me get these posted in my accounts here, Nick. What else going on for today? I mean, I think 10,000 is going to get tapped this week.
I'll let you do that. I'll keep going for a second.
Okay.
Yeah. So just checking in, updating guys on post CPI news move here. We have S&P 500 pretty much flat. You have NASDAQ also pretty much flat. Dow Jones flat. Russell holding up, right? 0.56. And I just checked. We did have updated CPI data hit the edge finder. And so what we can see here is CPI year over year, neutral, obviously for most things, right? Because you're, of course, having 2.7% compared to forecast. So this doesn't really surprise the markets. And remember that in terms of short-term moves, you're talking about the next 1 week or so, it's going to be about the surprise factor, right? If you had seen a 2.9% inflation when everybody expected 2.7, or a 2.5% inflation when everybody saw or expected 2.7, those are the types of data drops that get people excited and start moving charts. But today, the CPI report came in pretty much in line with expectations. And so I think we kind of have to default to where we are at with things. And when I'm looking at this new scorecard, by the way, Chris, we've been working on this like crazy here recently. I appreciated your feedback on it too. Basically trying to lay out all of this economic data that we talk about so frequently in a really easy to read format. So when we talk about inflation is going to kind of give us a neutral reading on things like silver. But when we flip over to like S&P 500, this is where I'm saying I'm not as outright bullish on indices at this moment. It's because if I take a look at the S&P 500, you can see we have had a bullish reading for the last few weeks. We've tempered a little bit here in score with some of the fundamental data kind of working against us here. And I kind of see the I kind of see the vision there. When it comes to institutional positioning, we know that recently there has been some more selling on the commitment of traders report from institutions on the S&P 500. The technical bias remains bullish. I think that's very obvious in terms of the overall, look at your moving averages, you're at all-time highs, et cetera. Inflation data, we're at neutral, right? So you had the inflation report come in as expected. PCE year over year did come in better than expected. PPI came in line with expectations. So we're getting kind of neutral for these ones. Bullish for this one. However, the 2-year yield has been showing it's not cooperating, right? So this one we get a negative because the 2-year yield has actually been rising here. So we know the Fed has, they want to cut rates, but the market is worried about everything that's happening between, the Fed and the White House, right? This uncertainty about interest rates, being pumped lower for the sake of kind of appeasing the White House versus the Fed trying to do what they see as right. So I don't know. We'll see how that all factors in. But when it comes to the jobs market statistics, we had a bit of a weak NFP report, slightly worse than expected. In terms of unemployment, though, that was a good print. Weekly jobs claims slightly better than expected. ADP worse than expected. And job openings worse than expected. So when we take a look at the full picture, you've got a little bit of a mixed economic read for S&P 500. That is where I'm kind of on the camp of I'm going to sit back and wait for pullbacks on stocks and indices. And I still like the story for precious metals. Weakening jobs market, Fed rate cuts, uncertainties between Fed and White House, geopolitics. I mean, the story is there. The better, in my view, it's not necessarily, is this, a bullish story for gold? I think it's just objectively it is. What's not so easy to answer is whether or not that's priced in and whether this is already overdone or not. That's where I think the question comes with precious metals. But for me, the way I'm playing it is I see the story. It looks really strong for precious metals. I'm long gold and trailing my stop loss below this prior all-time high. If we come down and break that, then I'm out. If we keep moving higher, I will look to trail stops and just keep riding that momentum until it dies out. Chris, what do you think on precious metals?
Well, I love them. I'm glad that I'm continuing to participate. I'm a little, obviously it makes you feel worse that you took some profit in October. I was stopped out here on a 3-year campaign trade, but I did get back in on the dips. I'm still riding this thing with a, bit of a position, probably about a quarter of what I want it to be.
Sure.
But nevertheless, I mean, gold from that dip is up, 18%. Silver is up like 100%.
Insane.
Yeah, that's just insane. It is insane, dude. I mean, this is up, wow, 89% since that dip in October. So, I mean, I'm positive. I'm participating, and it's performing far better than I would have thought, even through took profit here, which is like, oh my gosh, I gave up so much profit. But, got back in right away on that 12, 13% dip. I think it was like 15% peak to trough. Did not get shaken out by this 15% dip. I keep talking about the bar count on gold. I keep talking about the bar count and the 200-day moving average. I don't know what the reason is. I don't know what the catalyst is, but I swear that gold is going to hit the 200-day moving average this year. And I think it's going to happen hopefully in the next like 60 days. So I'm not taking crazy pills where we hit 600 plus bars and it's just up and away. Nick, I think in 2026, man, I think we're going to see a lot of just like runaway parabolic type trades. I think, and again, I'm not trying to like find those individual needles. That's one thing that's very difficult is if you have a runner like that, like let's say just take silver. If you have any chart that looks like this and you're benefiting from it, please do the best thing you can and manage profit. Like move stop losses, manage profit. Do not let a chart like this all of a sudden turn against you and drop 30, 40, 50%. When you have runs like this, just even a tight moving average, like a 9 period or a 13 period, like very, very aggressive price action, trail that thing, get below like the moving average plus a candle or two and collect as much profit out of as you can. But once it, goes parabolic and goes straight up, I don't know if it's going to be the ratio. Like I think the historical ratio is around like 45 to 50. So when you go XAU, XAG, and we're at 52 right now, I wouldn't be surprised if we see like an abrupt shift from maybe, gold kind of tops out, corrects, and then silver corrects even faster. I just throwing it out there. Like, I'm not trying to talk anybody out of being long gold and silver. I want to still be in them long. I think, all the things you mentioned, the reason to stay long precious metals, throw in the, I don't know, maybe the next 5-year, 10-year debasement trade that's still going on and has been going on. Now it's just getting all the attention. But I mean, if you were to think, what is the probability that governments continue to print money? What's the probability?
100%.
100%. So gold and silver will probably benefit. And silver now is industrial and it is a must have. It's strategic for AI. There's not enough silver and there's not enough copper. And that like supply, that insatiable demand with limited supply is continuing to drive those charts to look ridiculous. So the historical average here between gold and silver, this ratio might pivot hard. I still think that we're due for a pullback technically on gold. And if that is the pullback that I see that makes silver work even faster, I just want to be kind of ready for that. But it's been a fun kind of start to the year. We're at all-time highs on both. But just throwing it out there, like I want to add more to it. I think these are great trades to stay long. I don't know what kind of a percentage are you thinking or talking about? I hear a lot of people that are talking about going, 50% in on gold and 20. It's like the all in is very scary just because if you're all in at the top, you don't give yourself any room for error if we do have a 20 to 30% correction.
Right. And that's the thing is people who are, they're looking at the precious metals and they are parking. That's where I make the distinction when I'm talking about these things between investing and like just allocating your portfolio to it as opposed to, I'm kind of renting the space. I do love precious metals longer term. However, look at this monthly time frame, or you have a broken chart here on silver and gold. It is just a ridiculous looking chart. It is definitely seemingly like the year of broken charts, at least in 2026 so far. And so you look at these things and you say, okay, logic tells you that is not going to sustain itself forever.
Right.
And so when you say, okay, well, then what do I do with it? I mean, for me, the only answer is I don't know where it ends. I know that there's a good chance that it could end with some volatility. It's very likely to end with volatility because volatility is higher. So volatility goes both ways. When it's up, it goes up quickly. When it's down, it goes down quickly when you have very high levels of volatility. So the only logical way for me to manage is exactly what you started out when you talked about this is trail stops, take partials, scale out of it. That's how I would manage this position because again, I think that one of the biggest mistakes people will make is they will start using certainty terms, right? Gold and silver are definitely going to keep going. The dollar is crashing. It's going to zero. Look, if you're a precious metals person, you know very well that story has been going on for 30, 40 years, right? Yes, we know the dollar index is losing fiat currency value. So I'm just saying, precious metals, the bull case is very real, very strong, but never say never. And please be aware that markets can be very, very volatile in both ways. This is coming from somebody. I am long gold. I'm trading it long. I would love to see it keep going higher, but I'm telling you, getting your hopes up and having this certainty idea, gold is never going to come down. It's just going to rip. Be careful with it, because it can, and it can come down hard. So to me, the only logical way, I liked the bull case. I bought it when I felt it was on short-term discount. I put a stop loss, and this trade has really worked out for me. There's a lot of times where this doesn't work out and I stop out, right? So full transparency. But now that I've got this runner, my plan is, hey, as long as it keeps putting in higher lows, higher highs on this, as you mentioned, the tight stop loss through price action, that's how I manage it. But you could also, apply a simple moving average to Chris's point, simple moving average. And what is this one? It doesn't, you can
probably
kind of
default at 9.
Yeah. So you've got like a 9 moving average here. You could do something like this, where you say, okay, I'm gonna trail behind here, right? If price closes below there, I'm out. There's many different ways to manage a stop loss. For me, I like to use price action just to monitor my positions. But just be careful, because a lot of people will, I mean, almost certainly, Chris, people will mess this up and people will chase it off of a cliff somewhere.
Yeah, people will just be leveraged, and they'll be over their skis on position sizing, and then any pullback they can't really stomach. So yeah, but if you think about it this way, look, institutions are net long. So I mean, it's a good place to be. The charts are looking a little broken, which is the only thing. That's the only thing I'm really concerned with, is like the charts are looking broken. So we see a lot of charts. We've been in the markets for a long time. We see that usually when charts look parabolic, they tend to correct parabolic. So yes. I mean, we had a bit of a deleveraging a little bit. I mean, you look at Palantir. I mean, these are some of the high flyers for last year, and I mean, we had a 30% correction. You look at Oklo's in the nuclear space last year. Like some of these big themes. I mean, look at this one. This is nuclear, right? Down 60%. Like that's the type of stuff. Like this is a silver chart to me. It's like
BMNR is another one.
That's the type of correction you get, and you don't want to be fully invested at these tops when that type of correction can happen. And then but again, to be fair, a correction, I do think if you wait it out, you'll be fine. It's just be prepared for like 20 to 50% pullbacks. I mean, commodities are not the indexes. They're probably double to triple the volatility. So and
they can have that volatility, where an index usually won't have like a 90% up year, right? Commodities can, but they can also have 80, 90% down years, right? So they have a different structure than an index. And so, yeah, I think that's a great point. And understand that where you get that upside in something like silver, it can certainly turn back. Like, understand, it sounds insane, but silver could have this kind of move. Like that's a possible move for silver. As ridiculous as that seems like it could happen, and I'm not necessarily thinking that could happen. I'm just saying, understand that's how commodities can be. Look at copper. Like, look at what is that, right? Like, copper can have a 1-day drop of 18%. And so it's like one thing where you understand, like, okay, commodities they move differently than stock market indices.
And also one thing, I mean, so these prices are insane, right? Silver going up the way that it is, copper going up that it is. On a positive note, as far as like this whole build out and this whole demand, is that the price of copper, even if it doubles from here, or the price of silver, even if it doubles from here, it doesn't necessarily like break the AI narrative. Like there's such a small portion of what goes into every data center build out, goes into every phone, every computer, everything that's needed for this whole AI infrastructure. I mean, right now, the crazy part is like everything is kind of price insensitive. We have like the world that is racing to do everything they can to get AI. The US right now is probably 3 to 4 times behind China as far as energy efficiency. So I think that's why we're making some crazy geopolitical plays right now. I mean, the move to Venezuela, the talk of Greenland, it's probably not going to stop. Like if Trump maintains midterm, I know that the betting markets are predicting that the Democrats will take the midterms this year, but if they somehow don't, I think that we're going to continue to see some really bold plays geopolitically by the U.S. and it's potential geopolitical risks. It's just another snow globe event. But like I was saying, the positive note is like even if copper doubles from here or silver doubles from here, good for traders. I think that the story, the narrative, the demand still stays really, really high on both. I was really pretty pissed last year about copper because once this like daily and weekly disruption happened, the futures market was awful to trade. Like I was looking at like I would have risked like $2,000 to make like $300 on this trade, and I was so mad. I'm like,
I remember that
markets are so badly priced. That I couldn't even get a stop loss below this like April 2025 low without risking like 3 or 4 times my money. So I didn't do that. But I participated in some little like credit spreads or whatever. But I mean, hell, the thing went up. What's our percentage here? Just from that low, I mean, we're up 39% in copper. I mean, you can put that a bunch of times, and then silver, of course, is up 80+%. So crazy. Man.
Absolutely crazy.
Well, hey, we got to go here in a few minutes.
Yeah, we're out of time here. We got to bounce, and we got our next show host coming in, and Chris has got his next thing to do. So, real quick before we toss the show over to Marco, just a quick reminder that we're doing a giveaway to the Edge Finder here this week inside of our free to join Telegram channel. If you're not already in there, scan the QR code that you see above my screen or above my my camera here. Inside of the Telegram channel, we're sharing updates and ideas. All you have to do to join, simply click the link that's going to be dropped in the chat right here. Click this, join there, and then just enter the giveaway right here. One person will get a copy of our software, the Edge Finder, with all of its handy dandy recent changes and updates. You don't want to miss it. So free chance to win a copy of the Edge Finder. Just join Telegram. Takes like 2 seconds to do. All right, up next we've got Marco. Thanks, Chris. We'll see you next time, man.
See you, Nick. Thanks.
See ya. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So Melissa got it right. Pretty funny comment that I found is Chris Pulver has looked much younger. Looks like he changed the camera and aged about 10 years, but I'm sure it's just the camera. So looking at the markets, what do we have? Aussie dollar, I had a position on, which I closed yesterday. So I had the position from the 19th of December, and I closed it yesterday for around 2.1 reward to risk. Pretty nice position, pretty happy with it. I decided to use this dollar weakness to get out of the position because I do believe the dollar will keep on gaining strength. So as you know, there was a bit of a risk-off play yesterday because of Powell, because of the drama around Powell, and the dollar sold off. But I do think the path of least resistance is actually to the upside. And this thing is going to keep on creating higher lows. I'm not super bullish. I don't want to slap on a dollar long position just yet. But I definitely shifted my stance from being bearish on the dollar, so essentially buying the Aussie, buying the NZD-USD. Let's check it out, NZD-USD. Yeah, and now I've flipped to possibly definitely being neutral, but maybe even more bullish on the dollar. So I don't want to be in NZD-USD longs. I don't want to be in Aussie dollar longs. I think we could get some corrections. I think we could get some pullbacks. We had some pretty significant news for today. So let's refresh the Forex Factory. We had the USD core CPI year-on-year print. So looks like inflation is under control. Core CPI came in lower than the forecast, same as the previous number, month on month. And then CPI year-on-year is 2.7%. So if we take a closer look at the trend of inflation, so CPI year on year, 2.7% looks like we are going a bit lower. That's pretty nice. Again, the one-time inflationary increase from tariffs has passed, so that's done. That was only a one-time thing. US economy seems to be doing well. The jobs market seems to be doing okay. Inflation seems to be going lower. That's a pretty good story for the US at the moment. So that should be bullish for the US dollar. The market impact from the CPI was, I would say, pretty limited. I mean, the impact was pretty small. This is the CPI candle on the 1 hour chart. Nothing really happened. It was more of a mean reversion play. So it looks like we sold off a bit, but then we went sort of to the equilibrium. So no massive impact from the CPI, but this whole situation does tell us that the US markets seem okay, they seem healthy, inflation under control, or not really under control, but it seems not as bad as I initially thought. And we have the jobs market, which seems okay as well. So if we look at the S&P and the NAS, S&P is up on the day, NAS is up on the day, Dow Jones up, Russell crushing higher, DAX, which is Germany, but it's going higher as well, Nikkei pushing into all-time highs and now at all-time highs. As far as my watch list goes, Aussie dollar is now out, so I can remove that. This position is done, closed it. This was a signal in the A1 trading Discord, by the way, and if you want to get these signals, if you want to get updates for all of the trades that I take, you can do so by clicking the link in the description, and you can use my discount code Marco to get 25% off, I believe. So join the Discord, get signals from Nick, Iwant, Chris Pulver, and me, and you get an interaction as well. You get fundamental event breakdowns, and you get much, much more. So I highly recommend you take a look. USD JPY, very, very interesting development. So USD JPY pushing into critical territory. We are now on red alert. This is now absolutely an intervention level. So above 158, let's see, 159 to 162, crucial zone. Let's see what happens. I'm looking for a sell setup. I think the BOJ will come in, do an intervention, crash the price lower. If you do some backtesting, you would notice that usually when there's an intervention from the BOJ, Bank of Japan, the price of UJ drops by 2 to 3%. So the price drops by 2 to 3%. And if you structure a trade around it, so let's say we go a bit higher, or let's say you just sell here, aim for the bottom of the range, stop loss kind of at this level, positive reward to risk, which is really important, and look at the take profit. So around a 2.5% move. That can definitely happen. So 2.5% we can definitely achieve. So for me, this is a nice trade idea. Does this mean I'm going to sell right now? No. It means I will be a bit more patient. What I'm personally waiting for at the moment is I'm closely watching financial juice. I'm closely watching breaking news, and I can already see some Japanese stuff. Where did I see it? Some stuff out of Japan. Let's scroll down a bit more. Yeah, JPY, snap elections. We got some other stuff as well. But what I'm personally waiting for is something along the lines of, let's find it. Japanese Finance Minister Katayama, we have a free hand to take bold action on the yen. That is what I would like to see. I don't think it's, I think it's a pretty simple, pretty not easy trade, but kind of simple to execute. And you can pretty much be sure that we're not going to go above 162. I would say there's like a probably 70 to 80% chance that the BOJ will not let USD JPY go above 162. That's what I personally think. Like, this is the last time they did an intervention. So massive crash lower. This was in 2024. They already started talking about not liking the exchange rate, possibly doing an intervention. What would be pretty funny is that they do an intervention, they drop the price by 2 to 3%, and then we gradually go back to the previous levels. That would be pretty funny. But again, I'm not betting on that. I'm betting on just a quick, sudden drop, quick, sudden crash lower. And I think a good target, in my mind, would be this level. So around 154.5, maybe a bit higher, maybe 155. Yeah, 155 seems to be a good target. One thing to watch out for, look at round numbers. So round numbers are areas with a lot of buy and sell orders. Humans, we love round numbers. So if you're targeting, let's say you enter right here. Let's say you sell right here. And you're targeting 155. I would definitely put the take profit a little bit above 155 to, let's say, 155.1, because you need to front run all of the massive orders that will probably be around the round number of 155. Okay, so let's just go to settings, coordinates. Yeah, so this is the line where there's going to be a lot of orders, and it may cause you to not get filled. So definitely put your take profit a little bit above the crucial round number level. Just a quick tip. By the way, in 2 to 3 minutes, I'll be giving away a free DNA funded challenge, a 10K one phase challenge. So make sure you stay tuned to the stream, because I'll be giving out a code for DNA. So I have USD JPY, waiting for a bit of news to develop. I have the pound Aussie. What do I want to do with the pound Aussie? Well, I want to sell it. I think we're still getting a bearish reading on the edge finder. Let's take a look. So GBP AUD. Yeah, bearish reading right there. UK or the pound is pretty bearish. The latest data is pretty bad. Aussie is doing pretty well. Aussie is, I would say, one of my favorite currencies going into 2026. So the confirmation for a sell setup would be a break of this support. If we can break this support level, I would be very much interested to get in on a sell setup. But if we just stay in this support level, if we just stay in this flat range, then I can't do much. Then I'm limited by the range-bound price action, by the corrective price action. So we could definitely just stay in the range for weeks, maybe even months. That's not off the table. That's exactly why I would wait for a breakout lower and then to get a setup. Okay. So at the moment, I have only 2 instruments on the watch list. If we look at some other stuff, if we look at the S&P, if we look at the NAS, I would like to buy. I'm focusing on the NASDAQ. NASDAQ does seem a bit more enticing, in my opinion. Let's check out the Edge Finder. What does the Edge Finder say? So NASDAQ. Neutral reading, which is a problem. I always want to have the Edge Finder in my favor. So if I'm buying or selling something, except maybe for USD JPY, because USD JPY, the edge behind selling USD JPY is totally not connected with like fundamental numbers and economic data. It's mostly connected with the BOJ and intervention. So I don't need the Edge Finder confirmation to sell USD JPY. But for selling the pound Aussie, for buying the S&P, for buying the Nas, I would absolutely like to get a bullish reading on the edge finder. So NASDAQ still not at all-time highs. We do have a bit of a triangle pattern. You can spot a trend line going through this level and let's say this level. And looks like we're starting to break out higher. We're definitely trying to break out higher. You can see how the price is getting squeezed. The movement is becoming smaller and smaller. And so we will get a pop up or down, or let's say like this, up or down pretty soon. In my opinion, it's going to be to the upside. There's just no reason for me to sell this market. There's no reason for me to be bearish on the US stock market. US is doing well, as I mentioned. The fundamental data is strong. Inflation seems to be under control. There's going to be rate cuts. The new Fed chairman will most likely be dovish. You have Trump's big, beautiful bill, lots of printing, lots of spending. So I like the bull case. But I would like to see a bit more development on the NASDAQ. So let's say two things that I would like to see to buy the NASDAQ. First thing, I would like to see a breakout out of this triangle. So a breakout higher, of course. Second thing is I would like to see all-time highs. I would like to see the price crush higher and then pull back to, let's say, the 20 MA. By that time, the 20 MA should catch up to let's say, the price, and we should get a nice opportunity to buy. Or maybe like a break and retest of the all-time high. So we break higher, retest this level. That would work as well. And on the S&P all-time highs, struggling a bit. You could make the case that the S&P is struggling a bit on this risk of, let's say, risk of news that started 2026. But I would say it looks okay, looks fine. And my main focus is the NASDAQ for buy setups. So now it's time for the DNA funded account giveaway. One thing I recommend is open up the DNA funded website, go to the checkout page. This is going to be a 10K one-phase account. So the fastest hands will get the challenge. I'm going to post the code in my trading view. So here it is, 3, 2, 1. This is it. So 10K one-phase account. Make sure you guys use it. If anyone or the fastest one, please put a comment in the comment section so that we know you have used the code. And for those of you that did not use the code, we do have a 25% discount code with A1 Live. So A1 Live gets you 25% off any DNA funded challenge, right? By the way, this is my personal DNA funded challenge. Currently in drawdown, minus 3.4K. This is a funded account. I'm trying to climb out of the drawdown. Aim is, of course, to get a payout. I have a buy trade open on the S&P. I have a sell setup on the Aussie dollar. Both trades, or actually the first trade is in profit. The second trade is in a bit of a loss. Maximum drawdown is 5K on this account. This is a 50K two-phase. And yeah, for any developments on the account, for any updates, definitely tune into my streams, because every single stream I open up my dashboard and show you guys my progress. I do have more accounts to give away. I think it's still like 9 accounts or 8 or 9 accounts to give away. So make sure you guys tune into my segments, because the giveaways will happen solely on or during my segments. You can find my segments in the A1 live stream schedule. And you can see, so today I'm on at 9 a.m. Tomorrow I'm at 9 a.m. Or sorry, yeah, today 9 a.m. Tomorrow 9 a.m. On Thursday I'm not streaming, and on Friday I'm at 10:15. So that's my schedule. Make sure you guys tune in. Gold and silver. Of course, we need to cover gold. We need to cover silver. My favorite is going to be gold. I'm not looking for setups on silver. Silver looks too parabolic, in my opinion. It looks too explosive. the risk-off environment that we had with US Venezuela, US Iran, I think we just had some US and Iran news today or yesterday. Yeah, so effective immediately, any country doing business with Iran will pay a tariff. And also, I think there was some talks of the US striking Iran with rockets. I'm not sure, but I think there was some news about that. So risk of situation creates uncertainty. Uncertainty creates a risk of environment, which gold and silver love. Now, gold is purely a speculative metal. So gold is mainly used for investment purposes, while silver is used in manufacturing, used in especially building of solar panels lately. So I don't think these prices will continue for a long time. I did try to take a short stab because I tried to call the top, and then we had the whole risk-off situation, which crushed my trade. But I did get out for a limited risk loss, or a small loss. I didn't take the full loss in this one, fortunately. But I just think this does not have the power, or it's more likely for this to end the year kind of break even or negative rather than end the year at all-time highs. If you go to the, what is it, the monthly, or is it even larger? 3-month chart. Yeah, you can see in 1980, this massive rejection candle, then you can see the one in 2011, and now the current one is this one right there. So personally, we can always continue higher, absolutely, but I don't think it's going to continue much higher. Gold, though, because of the risk-off situation, gold should benefit the most because of the inflation that's expected in 2026 with massive spending, massive printing, Trump's big beautiful bill, Trump controlling the Fed. Again, if Trump starts controlling the Fed, and that creates a lot of uncertainty. That creates a lot of problems. So people tend to flock into gold to protect their assets, to protect their portfolio from this uncertainty. So that even that is super bullish for the gold market. My game plan for getting in is, according to my trade plan, I can't get in at the all-time highs. So I have to wait for a pullback. I have to wait for a correction. I'm looking at the 20 MA, which is going right there. So I'm looking for a pullback to the 20 MA. Maybe if we go up a bit more, so if we continue trending higher a bit more and then pull back to the previous all-time high and pull back to the 20 MA, by that time, the 20 MA should catch up to the price, right? And that may be a good time to get in. So let me also check out what is the Edge Finder saying. Let's take a look. Edge Finder, gold, bullish reading, silver, bullish reading as well, which is nice. As I mentioned, I always want to have the Edge Finder in my favor. By the way, if you want to get the Edge Finder, the code Marco works for that as well. So this is for the Discord, and for the Edge Finder, you can get 25% off. All of the links are in the description of the stream. That's my game plan in terms of the metals market. In terms of crypto, I'm just being patient. So until Bitcoin climbs back above 100K, I won't do much. I'm looking at the 100K level as a crucial level. That was a key level of support. We also had a very important trend line running through there, which kind of coincided with the support level. So that's going to be a massive area of resistance. And unless Bitcoin can break the 100K mark, break above 100K, I'm not interested. Same thing for Ethereum. Unless Bitcoin shows me some positive movement, positive momentum, I'm not going to be even looking at Ethereum. Now, time for the questions. So we have 85 comments, 85 unread comments. So let's take a look. Please update your Chrome, Marco. I can't stop looking at the relaunch to update. Every single week there's a new update. So every single week there's a new update, and it's getting a bit crazy. I'm getting the feeling that GBP will surprise people. Well, GBP, let's take a look. GBP lately, oh, okay, this is cool. This is cool. Just saw the comment from Nick. So it looks like the asset scorecard is live, which is awesome. We're going to take a look at it right after looking at the GBP. So GBP is going to be under heat maps UK, and it's pretty bad. Pretty bad data, pretty bearish numbers. Also, if you look at bank reports, the big banks such as JP Morgan, Barclays, Citibank, most of them are selling the pound. So most of them have put the GBP as their bearish call for 2026. So that also helps to build a bear case. I'm definitely looking at selling the pound Aussie because I think Aussie right now is one of the strongest currencies. Of course, I'm looking for a breakout lower. I already covered this whole analysis. So I do like the pound, but you need to be careful with what you pair the pound. So don't look at things like, I don't know, to give an example, how does pound yen look? Let's see, GBP, JPY. Just be careful what you're doing because you always want to pair. Yeah, so GJ, the pound is definitely crushing the yen. So if you're going to do something with the pound, try to pair it with what you believe is the strongest currency at the moment. And in my opinion, the strongest currency at the moment is the Aussie, and the dollar is kind of becoming strong as well. But right now, it's the Aussie. So I like selling the GBP. Now to take a look at a new feature on the Edge Finder, so the asset scorecard. This is kind of a summary of what's happening with specific assets. So let's take a look at Bitcoin. Let's take a look at Bitcoin. Neutral reading, I'm neutral to bearish. And let's cover gold. So you can see a breakdown of all of the numbers that the Edge Finder is looking at. And then you have a cumulative score of 6, which is counted as bullish. So yeah, I'm definitely going to look into this a bit more, but I definitely want to get into gold. Absolutely want to get into gold. Let's actually put it on the watch list. I think this level is pretty good for a retest. I do think we're going to go higher a bit more and then pull back possibly to this level. Possibly the 20 EMA catches up to the level, so we get a confluence with a support level plus the 20 EMA. So kind of you have dynamic support and you have this flat support. So that is what I'm looking for. And let's also put this alert a bit higher. Need to update the alert as well. So that is about it for my segment. This is the final watch list. The CPI news came in looking pretty good. So looks like inflation is not elevated. Looks like it's staying. I mean, it is above 2%, but it's around 2.7. So it's falling a little bit at least. It's, I would say, under control, which is good for the US. So gold, pound, Aussie, USD, JPY. I haven't yet decided when I will enter USD JPY, but if I do decide to sell it, you'll immediately get an update in the A1 Trading Discord. So thank you very much for watching. Tune into my stream tomorrow because I'll be doing another DNA funded giveaway, and good luck in the markets. See you in the next one.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream. All right, we are back for round 2, and this time with a banger with a special guest, Mr. Tiger.
What's
Berry.
going on? Hey, beautiful day today. How you doing, Nick?
Good to have you on, Tiger. So Tiger, you've been a fan of the show for a little while. You're an EdgeFinder user. We've connected, and I'm excited to have you on because, you know, we always love having new people show up and share their thoughts and opinions and how, you know, to take on the markets. And then I was hoping we could just chat for a little bit, talk a little bit about your style of trading, how you use EdgeFinder, how you are watching the markets, and just get going with it. So it's nice to finally meet you.
Yeah. It's kind of funny how I kind of found you on YouTube, Nick, and all because of one indicator, and that was the retail sentiment. That's really what I was seeking here a few years ago, just trying to dig a little deeper into the contrarian signals. And you have it for free as a little bit of a teaser on your EdgeFinder. And so for probably a solid 2 years, I used just that, thinking that was the holy grail.
Sure.
Yeah. And so, needless to say, my trading wasn't going the way I wanted it. So I thought, well, I better dig into these fundamentals and send them a little deeper because Nick's making all the money on stream. I want a piece of it.
Well, you know, what's funny about that, Tiger, is actually that's how I started building these tools. Like so long ago, I was like, well, it would be just cool to see what the crowd sentiment is looking like. And then I was like, okay, well, that was pretty helpful, but what are the professionals doing? And then I looked at COP report, and then I started realizing like, oh, well, what are the institutions actually basing their decisions off of? Oh, they're looking at the economy and what the Federal Reserve's doing. So it kind of, it built itself progressively in that way. So I guess jumping right into things, Tiger, what do you trade primarily? Do you trade currencies mostly, commodities, indices? Do you trade a basket of things? What's your sweet spot?
Whatever the EdgeFinder gives me.
Okay.
It's funny because I was into Forex solely for probably the first 8-9 years of my trading career.
Yeah.
And just because I got fascinated. It's funny, long story short, I took my classes with Online Trading Academy. I think they're Trading Academy now. They've changed names, but I originally was interested in stocks, all because of Wolf of Wall Street.
Okay.
That's where I got my start. I thought, well, that's a cool little setup. Let's see what this trading bit's all about. And so anyway, I took a stock trading course. I retook the course because they give free lifetime retakes. But then I realized I didn't have $25,000 at that time to fund an account.
That's right.
So I dug a little deeper into the assets and saw, well, Forex, I found where I could get into account for $2,000. So a little cheaper, a little better. So I took a Forex class, and that's really where I kind of fell in love with it because I just enjoyed the idea of looking at 8 major currencies as opposed to 16, 17, 18,000 stocks, and just learning the behaviors of them, the nuances, and just matching them up, weakness versus strength.
It's always interesting to me to hear how like US people get into Forex, because you know this well, like, internationally Forex is super popular. You have everybody in the world who loves trading Forex. In the US, it's like you mentioned, it's very stock heavy. People are interested in stocks, and it makes good sense. You have stocks are just, it's a big thing here in the US. So very cool to hear that, and how you kind of got into the Forex side and have kind of now come full circle with all sorts of different things that you're watching. Tiger, if you want to share your screen here, there's a little on your StreamYard here. There's a present or invite or present button there. If you just hit that, you could share your screen, and we could maybe just take a look at some of your charts here and see what you get into. I think we got it, so we can pull that up.
Okay. Perfect. Yeah, cool. I always start with the currency index, the Dixie, and I take a look at all the other major currency indexes too, depending on which trades I'm looking at. But right now the Dixie, man. One of the first things I like to look for is where are potential reversals. So for me, it's always all about supply and demand zones, dailies, weeklies, monthlies on these indices, just to see where the major turning points potentially are. And so, yeah, currently we're in the middle of a daily supply zone. We're trying to reject it. And so, you know, overall, I would suspect this thing to probably be going up, but in the near term, I mean, I kind of drew this up the other day, just basically looking for some type of reversal pattern to play off of, and then ultimately find a higher time frame demand zone to bounce the other way. So that's really kind of where it starts with my dollar pairs. And then from there, it's all about flipping on over here to the edge finder and taking a look at the top setups.
So would you say dollar index is like where you usually start your analysis for the day? Like you start big picture dollar index, even if you're going to look at gold, stocks, dual currency pairs, DXY is typically where you start?
Yeah, exactly. I mean, I just like to see where the overall turning points are, because everything kind of trails from the dollar in a way, even if it's indirect. So yeah, I just want to know where potential reversal patterns are. And if we're not anywhere close to a supply or a demand zone, then, you know, that would tell me that we're probably likely potentially going to keep going in that direction, at least from a technical perspective.
Sure.
Before we dig into the fundamentals and the sentiment.
Sure. Yeah, no, that makes sense. And from what I've seen in your videos, I love that you kind of take that full, you know, the full compass view that, you know, I'm big on, and a lot of traders do, which is bring in the sentiment, bring in fundamentals, bring in the technicals. So taking a look at this dollar index, you've got clearly a big level of resistance there. Right. If you're thinking that the dollar index potentially has some downside, what would be your next step? Do you jump over to another index for currencies, or are you looking at you know, an individual currency pair? What would be the next step?
Yeah, exactly. I mean, I just want to make sure I'm not trying to buy into a supply zone or sell into a demand. So that's really kind of where it all starts. And then, you know, for example, right now I've got the Aussie dollar trade on. I've got that long since Friday. It's not giving a bullish signal now, but it was as of yesterday, I believe. I think for the last 5 or 6 days. So it's fallen off. But like you say on your videos all the time, just because it falls off doesn't mean I want to go out and hit the sell button and short and, you know, close the trade.
Right.
So yeah, currently, I mean, that's where I'm at over here on the Aussie dollar. A great example. I got into this trade initially from, I think it's my chart. Is that right? Okay, perfect.
Yep, you can see it.
So yeah, I ended up getting into this trade off of this 4-hour demand zone over here. I guess I deleted the box, but this was kind of my starting point right here. So daily 4-hour demand. If I flip it down to a 1 hour, there's a confluence. That's what I like to see, Nick. I like to start with daily 4-hour demanded supply zone confluences, meaning I like to have that smaller time frame inside of the higher time frame, because that just tells me that there's multiple sets of eyes on it. There's the daily traders, there's the 4-hour traders. I'll drop it down to a 1 hour and a 15. And the more eyes on that, the better.
Yeah. Yeah, no, that makes great sense. And I love how you did that, where you went dollar index. Now you're looking at the Australian dollar. You check the edge finder at the time. By the way, I have the same circumstance going on with my Russell position. I took a long trade on the Russell 2000 index. And at the time, actually with this new feature we've been playing with, if I look at the Russell, let's go Russell, you can see that we don't have this yet for currencies, and I'm really excited to have it for currencies too, but we built this first for the non-currencies. But this little edge finder score over time is nice because you can kind of visualize what we were talking about. So I bought the Russell, and then the score in the edge finder has pretty much gone flat since then. And so to each their own, how they exactly, you know, use that reading. But for me, it sounds like we're on the same page with this, where if edge finder gives me a bullish reading, I like the setup, I build the trade plan, I take the trade, and then it goes neutral on me or even goes negative, I'm just going to let price action take me out of the trade. I use trailing stops. And that's my next question to you is, how do you, what type of, on the technical side, entries and exits, are you looking for trailing stops as well? Do you take partials? Are you looking for a 1-to-1 risk to reward? What's your kind of entry and exit style?
Yeah, I like to trail. I mean, the goal number one is get to a 1-to-1 reward risk as fast as absolutely possible so that I can take the risk off. Yeah. And I say this a lot on my streams, guys. Our number one job is not to make money. Our number one job is to conserve capital, because if you conserve capital, you're paying attention to the fundamentals, the sentiment, the technicals. The money-making part will take care of itself.
Yep.
So goal number one is get rid of that risk as soon as possible. So yeah, for this Aussie dollar trade, obviously I, start with a stop loss below, and then as we start breaking some of these structures over here to the left, well, that's where I just simply start moving my stop loss up under this swing low here, and then eventually under this swing low where I'm currently at. So right there, I'm out of this trade as far as no risk, and even a small win if it goes against me. So,
that's great.
And I'm okay with that, because the amount of times that price comes down into here and goes towards the bottom and then reverses I find for me, it doesn't really happen that often. If it's going to come down here, it typically is just going to keep going and blow out your would-be stop loss. I only trade a demand zone or a supply zone once. So if it's mitigated, I ignore it. But it's already been touched, and all the liquidity, all the unfilled orders in this area should be taken out. So I just want to get rid of the risk as soon as possible, because if it's a good trade, it should just keep going. I mean, get some slight pullbacks like what we're seeing, but just get rid of that risk. And then you come into the day where we had the inflation report stay the same. Like you said earlier on stream, getting all the volatility, there's no play for me. I just want to leave it there and let it do its thing. And then start breaking some
I love that. I love that mentality of like, get rid of the risk as fast as possible. And that, to me, it's like the first thing you learn in trading that, like, I don't know about you, but for me, like, I ignored it because I went in all different directions when I first started trading, but it was like, follow the trend. Yeah. Follow the trend and let your winners run and cut your losers short. Like, I heard that like everybody else when I first got started trading, and I completely ignored it. I didn't like taking losses. So I would, let my losers become big, and I would take profits quickly and I think that's a very common, thing people struggle with, because it is hard, Tiger. Like when you have a trade that is going right and then it completely falls apart, and you take a tiny win, or you even take a loss after it's been in profit, that is psychologically difficult. And it's the worst part, in my opinion, of trailing stop losses is when you have something there and then it all gets washed away, and people hate that psychologically so much that they'll kind of bail on that ideology. But for me, I'm kind of with you, where it's like, get rid of the risk. And if it is a good winner, I love what you said there. If it is a really good trade, there will be no doubt, right? It is just going to rip in one direction. It's going to keep going, and you'll be able to kind of just keep ratcheting that stop loss. And, I love that, because again, those are evident of my best trades. I'm sure as your best trades as well. When they're those really good ones, they just keep going and going, and they don't stop, and you can just kind of keep ratcheting that stop loss. They're rare, but they're great when they happen.
Yeah, they are. And if you have an ESS rule or a consistency rule on a prop challenge, they'll screw it.
Yes.
I've come to realize. So, that it's kind of an oxymoron when you're trying to go through, because I've got a couple challenge accounts going, and I just realized that's a rule on one of them. So
you're talking about the consistency rule, where you can only close like a certain, like you can't close too big of a trade in one day, right?
Right. Yeah.
Got it.
Yeah. There's a 40% consistency rule. There's a 30. There's a 15 if you're on instant funding accounts on a lot of these prop firms. So it's just kind of funny. And it seems to me like when you're doing those types of accounts, you got to just stay at a strict 2-to-1, 3-to-1. Right. Don't let those runners go. And it sounds stupid as hell when you think about it, but yeah, it's crazy. So yeah, note to self, if you guys are ever looking for a challenge account, make sure whatever firm you're looking at doesn't have some crazy ESS score or ridiculously low consistency score. So,
and I know also you're a bit more on the swing trade side of things, Tiger. And and actually I'm glad you brought that up, because, prop firms, I do agree with you. I think they're a little bit more tailored in general towards like day traders and people who have very short-term strategies. However, I know that there's also like different practical ways that swing traders try and adapt their style to prop firms. Like, for example, taking partials or, kind of trimming that winner as it goes.
Yeah.
I'm with you. I don't love the idea of like taking that approach. I'd rather just trail. But have you found anything in terms of like adapting to a prop firm style of trading as a swing trader? Obviously, you just mentioned the consistency rule is key. Make sure you know that up front about which firm you're going with. What other things are like as a prop firm trader? What are you thinking on that side of things?
Man, I mean, just keep, well, for the ones I'm in, especially just keeping like 3-to-1s, because again, I've had a handful of runners this past year that just completely turned that score upside down. So, you know, if it's a good trade and it's going to keep running, just go ahead and close it for a 3-to-1 or something like that, and then just reopen it the next day.
Right. That's a good point.
I had a great example of that back in October. I mean, I had a trade that ran. It was about a 6-to-1. But yeah, I wasn't thinking about that rule, and it turns out it just completely flipped that score upside down. So, yeah, in hindsight, just cut it at 3-to-1. I mean, 3-to-1 is what I was taught to begin with, and going back to the stop loss rule, that, you know, back in the day, I was never moving my stop loss. It was either going to get a 3-to-1 and close me out, or it was going to give me a small loss.
Okay. Yeah.
So I got sick of that, because after a while I'm like, well, shoot, this thing went 4-to-1, 5-to-1.
Yeah.
Or this thing came back and retraced and obviously stopped me out. So why not get rid of the risk as soon as possible? If it's a good zone, it's going to keep going. If it's a bad zone, then it wasn't meant to be your win anyway.
Yeah.
That's kind of the way I look at it. So
makes good sense. Well, Tiger, I've enjoyed speaking with you, but I want to give you a little bit of a chance, if you're cool with it, to take over the stream and just walk us through some of your charts. We're here behind the scenes. We'll just kind of give you the floor to discuss whatever you'd be looking at, share with us whatever you are watching currently or setups that you're looking at. Are you good with that?
Yeah, I'm fine with that.
Okay, cool, man. Well, it was nice. It was nice meeting you. Nice speaking with you. And I'll back out here, give you the floor. And whenever you're done, I know James, our producer, let you know. Whenever you're done, just say, you know, thanks for tuning in, and we'll shut down the stream on our side. So nice speaking with you, and enjoy the stream.
You too. You too.
All right,
appreciate
thanks,
it,
man. Thanks.
All right. Well, hello, everybody. Yeah, it looks like I do have about 12, 13 minutes here. So I'm telling you, I'm a walking billboard for this Edge Finder, because again, back in the day, like I was telling Nick at the outset, I was all about the retail sentiment, thinking that was the holy grail. But then when you flip over here to the Edge Finder, it's just one item on here, right? Looking at all these items and as a collective whole has completely changed my trading around for the better. This is now my 12th year of trading. I spent the first 10 years of my trading just doing the charts, just doing technical analysis. Yeah, I paid attention to, you know, Forex Factory and to see where the day's red events were. The problem is, today's a great example. We're looking at we're looking at the inflation today. Well, tomorrow we're going to be paying attention to the retail sales and the PPI. Well, and for me in the past, I would forget what readings we had the day before, the week before, whatever the case is, thinking that whatever was in front of me was the holy grail. Okay, in this case, the day's red events and then retail sentiment. But again, it's only one piece of the picture. So just do whatever you have to. If you haven't done it yet, do whatever you have to get this item. I'll be honest with you, I had a negative balance when I got the Edge Finder, but that's because of how much I believed in it after seeing everything ingrained into me from all the Trader Nick's videos. So get this thing, it will improve your results. So yeah, flipping on over to today. Again, my main plan for the day is just paying attention to that Aussie dollar position I've got going. One thing about this trade is when I got into this demand zone, the first thing I automatically always look for is, where is a potential turnaround? So in this case, where's my overhead supply zones? And I draw it up. I've got to explicitly see it. So you guys see where I put that rectangle there. And as you can see, it's bounced into it. Now, I expected a bounce like this just because of the potential unfilled orders. Okay. I expect it to bounce downwards, but continue upwards. And ultimately, I've got to take profit up here. There's another supply zone up here at the top. So just these are the reactions that used to always get me out of trades prematurely. Okay. I see a big wick. I see a turnaround. Oh gosh, I got to get out of the trade. But no, you just got to trust your analysis and the technicals. Okay, the longer term technicals being up in this case, and just let it do its thing. And so yeah, just as far as my mindset goes with this trade, that's it. Okay, I drew that up. We got the reaction. Obviously, today we had the CPI number come out flat. Okay, so definitely getting a lot of volatility on this thing. Moved in my favor, came back. So this is to be expected with a flat number like that. So yeah, I'm just going to let it do its thing. I mean, ultimately, there's nothing more that I can do. It's out of my power. It's out of my control. But that's why I was telling Nick. I mean, I trail my stop. I lock in those gains at least enough to cover my swaps, my fees, right? At least enough to cover that. So that's what we've done. So outside of that, I'm paying attention to the New Zealand dollar since it is on the list as well. I don't traditionally like to double up my risk on any one currency. So in this case, I'm in the Aussie dollar. Do I want to get in a New Zealand dollar on a pullback? Possibly, because I really didn't put that big of a risk on the Aussie dollar. But if I were to put a full risk on it, probably not. I just really don't want to double up my risk unless I just split it up half and half and they hit a zone at the same time. So, but anyway, we can still take a look at it. Just a couple of alerts I've got going on over here. Let's see, New Zealand dollar. Where are you at? Let's do this. New Zealand dollar. Okay. So New Zealand dollar, what have we got? Well, higher time frame, we've bounced into it, and I need to actually switch my chart. There we go. So higher time frame, we got a daily demand zone that we've kind of bounced into a few times, and kind of created a little bit of a double, triple bottom of sorts. Now we've come through and kind of cleared out some of that liquidity. And then we've got a brand new bounce, a brand new up candle that has broken some structures over here on a 1 hour time frame. So there's really a couple opportunities here, but I'm not excited. I can tell you already by this demand zone. I'm more excited by the one underneath. Why is that? Well, if I flip all the way over here, 2 hour time frame, and we take a look at this demand zone, there was a lot of trading activity that occurred at the formation of this demand zone. What makes a good or bad demand zone or a supply zone? Well, guys, for me, it's RSI because we don't have a centralized volume in currencies, right? So what's a way to kind of cheat the system and get around it? For me, the best thing I've found is the VSA, the volume spread analysis. And it's not so much the volume, it's the trading activity, okay? A lot of trading activity occurred right here where this demand zone was formed. So that's number one. And then number two, we broke this structure. Okay. But one of the most important things that I have to see on a supplier demand zone is a gap. Okay. So if we're looking at the creation of this zone and we draw up our gap, that would be it right there. So the proximal line of the demand zone, we skip the leg out and we go to the bottom of the second candle. I have to see a gap. If I don't see a gap, I ignore those zones because that shows a high concentration of demand, overpowering supply, pushing up, breaking this structure, which happens to be a double top as well, and doing it with big volume. This makes it a good zone for me. It came back and got close, but I actually magnified in. We missed the zone, so we did not touch the zone yet. What happened? You get buyers step in right here. When buyers step in, what are they doing? What are they leaving in their tracks? They're leaving their stop loss, right? So if they're buying, then the opposite of a buy on a stop loss is a sell order. So there's sell volume down here. Just so happens it's inside of the unfilled orders from the strong demand zone. So we fast forward to today, a little closer to today. The same thing happened right here. Drop, strong buying, sell orders left in place. What do big banks need to fuel their up orders, their buy orders? They need sell orders. They need liquidity. So you got a big patch of sell orders there. You got a big patch of sell orders there. You got unfilled demand orders from that demand zone that exceeded structure with a gap, with volume. Ladies and gents, that to me looks like a pretty good setup if we can get a retracement. Now it isn't a higher time frame downtrend at this point though. So this is where you just got to trust your system, man. If I look at this on a smaller time frame, we've broken this structure here. So to me, on this smaller time frames, it looks like we're trying to break upwards. I ignore that demand zone because I didn't really particularly care for the volume, and I'm more interested in those unfilled orders and the liquidity underneath that double bottom. That's a pretty sweet looking setup for me, and I kind of drew that out already. Let's see here. Yes, that's Tiger in the chat. Hey there. Hey, Bashy. Sorry, guys. Just paying attention to the chat real quick over here. Yeah, trade locker, man. I love trade locker. It's becoming my favorite. Uses Trading View. It's awesome. But anyway, am I just going to put a limit order down here? Probably not, guys. Number one, the zone itself is a little bit on the narrow side. It's not like it's a big range. So in order for me to get into this trade, I have to see a break of structure on a smaller time frame. Okay, so I've kind of already drawn this thing up. Whenever we do hit this a demand zone, we're going to get a reaction, maybe go in a little deeper, and I have to see this right here. This is what I draw up just about every single day on my streams. This right here would be a new higher high if we're just looking at this, more recent lower high, right? So for me, I have to see a break and close somewhere up in this area, and that turns this into what? Turns it into a new momentum candle, okay? So from this low to this low, or this high, it's breaking this structure. Momentum candle, momentum up. Now in its wake, hopefully it's going to leave me a nice demand zone on a smaller time frame. That's why I drew up this box right here. Okay. So what's my trigger? Well, my trigger is right here. Okay. When we come back down to this newly formed demand zone. The reason I love confirmation entries, especially if it's in a little bit of a sketchy area, is because, well, one of two things is going to happen. Okay? One of two things could happen. Number one, it could hit the zone and just fly off and run off and leave me, right? Have I lost money? No, I haven't made money either, but I haven't lost it. C'est la vie. The other option is it can come down and take me out for a stop loss. Okay, take out my stop loss. That would obviously be a loss. Okay, so I have to see this price action happen, because when it does that, it's at least telling me, hey, we're thinking about going higher. We've broken a structure. Oh, by the way, you've hit a demand zone from further back in time. We get that retracement to the newly formed demand zone, or maybe you could use a fib retracement, okay, a 61 or a 61.8 level, or even a down in the kill zone. There's another fib level, guys, called the kill zone. If we draw it up here, it's that 71 to 88 level. Okay, it's kind of, I don't know where they came up with the terminology, but that's just what it is. So yeah, you could essentially do this. Okay. Now I don't use this option very often. I really almost never do, because I care about one thing and one thing only, and that's supply and demand zones with gaps, with volume. Ooh, it's just the best. Let me tell you, that's my edge. Okay. And again, daily 4 hour, start with the daily, go to the 4 hour, and then preferably go down to even a 1 hour and a 30 and a 15 minute. If I can see gaps on all of those time frames, or my rule is 3. I have to see it on 3. Okay. 4 hour, 1 hour, 30 minute, 15. As long as I see gaps on all 3 of those with zones, that tells me there's a lot of different set of eyes looking at that same price. The big banks, number one, because they're the ones moving price, right? You and I can't do that. You and I can't move price. The only thing we can do is see what the banks are doing, what they're leaving in their wake, and ride their coattails. Okay. And obviously Nick is big on supply and demand zones as well. He does them a little different. I just get in there a little more intricate. It's funny because we were talking about how I got my start, and that's really what I focused on hardcore, was supply and demand zones. I mean, I've studied everything there is possible to know on this stuff. And every time I learn something, I realize I need to learn more. So that's just kind of my filter, looking for those gaps, looking for the volume, looking for the breaks of structure, making sure it's in the trend. Okay. Trend is your friend till the bend at the end, right? And then making sure we're following closely what the edge finder is showing us. So I love it. I also love the fact that we finally have our updated COT numbers. Okay. That was one thing I've been waiting on a while. I haven't even talked about it that often on my streams, just because we've been playing catch up, right? And I think Friday was the first time that we actually had it back as far as where there was no delays. So yay to the COT data being back finally. But yeah, I think that's the main thing I really wanted to share. I mean, yeah, we do have some other setups. I could take a look at gold, silver. I think we got like a minute left. I believe that's 30 minutes. Is that right? Yeah. Okay. So yeah, we'll just take one real quick look over here at gold. I know Nick's gone through it quite a bit. But one thing I'm looking at on gold, and I guess I can just kind of end it here. We've got kind of a same thing, guys. We got some liquidity pockets here. So buyers here, buyers, they're leaving their stop losses, which are sell orders. The banks need liquidity. And they're also going to get a bounce here because of a former resistance line. That blue dashed line was our former all-time high. So you're going to get buyers there. You're going to get sell stop orders. You're going to get all kinds of liquidity. But ultimately, for me, going down to the smaller time frame on a 30-minute in this case, there's my demand zone. That's a potential buy for me all day long. If that fails, guess what? Got a daily 4-hour demand down here waiting for a bigger discount. So yeah, that's really my play. A little bit of gold and silver, trail my Aussie dollar up, and just let her do its thing. Don't force it. Okay? Trust your system, and don't close anything early. So anyway, I think that's about it. Is that right? Double check here. One thing, lots on you. We can't see you. But yeah, guys, look, just to kind of finish off, if you guys are interested in getting up a little earlier, I am over here. Okay, just a little bit of a plug for you on at Trade Like a Tiger. And I'm really kind of going through a lot of the same stuff Nick is. I'm just doing it on a little bit different time frames and just kind of how I see supply and demand. So stick with Nick, though. Nick is the best I've ever seen in my 12 years of trading on here at explaining things. But if you're on the East Coast or if you're in London or somewhere, go ahead and tune on in, because I'm going to do nothing but build his show up, and I'm going through the same edge finder that he's going through. So at Trade Like a Tiger. And guys, with that, I think we've reached the end. So back to you. Tune in tomorrow for more Trader Nick.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.